Hang in there. I'm going to quickly take it across to Harit Shah as well for a first take. Harit, hi, afternoon. How is it that you would analyze numbers? Prima facie, like my colleague as well was highlighting, the headline numbers look in line, but what is it that you're making of the constant currency revenue growth at 1.8% on a sequential basis? Does it match up with your expectations?
Yeah, I think it was maybe slightly below expectations, but the 1.5 to 2% was the broad range on the street. So the constant currency revenue has, I don't think there's anything majorly negative about that. The margin has come a little bit lower than what.
Yeah, they have. Apurva Prasad, hi, afternoon. What is it that you're making of the numbers? Like Harit as well is highlighting, I think it's the margins which have disappointed while the headline numbers are in line. Apurva?
Hi, yeah, so I'm pretty satisfied with the, am I audible?
Yes, you are. Go ahead.
Yeah, so I think revenue numbers seem to be in line, 1.8% constant currency. Look, there's a very clear acceleration in the revenue growth, even if you look at the YOY trend, so that's a decent acceleration considering where they were 3 to 4 quarters back. I think margins seem to be on the lower side. We need to see the attribution of that. It could be maybe a higher impact of cross currency. I think that could be a reason, but yeah. So margins appear to be slightly lower than I estimate. However, I think revenue seems to be in line and set for acceleration. I think digital growth at 50% is again pretty significant. So I think that's gone above 30% of the entire revenue mix. So I think that's again an encouraging sign, since a large part of incremental growth for the company was coming largely from that segment.
Yeah, indeed. I'm just going to read out some more numbers, both of you. North America growth has come in at 8.2%. India growth at 9.7%. Latin America has grown by about 7.6%. BFSI segment has contributed 8.6% versus 6.1% sequentially. So that's where the big bump up has come. Also in the management commentary, they're saying that they focused on steering profitability back to a preferred range. Customers are picking the company for growth, transformation programs, and they're saying that operating margins are resilient despite the volatility in the currency. Apurva, given the fact that after that 41% appreciation that the stock price has seen all of 2018, but in the last 6 months, TCS has gone down by about 4.25%. Would you say that tomorrow morning there's scope for disappointment in the stock, just looking at the numbers optically right now?
No, I don't think numbers are primarily disappointing as such. I would say that the revenue acceleration is pretty much on track. I mean, if you have to look on YY terms, the rate of acceleration. So I think I'm not disappointed at all. In fact, it's pretty encouraging, the revenue number. The fact that profitability can be brought back about 26% EBIT, I think that's again a positive. I think the biggest point is the continued acceleration in digital. If you see the rate at which digital is growing the last 2 to 3 quarters, it's been accelerating. So I think that's a very clear standout. I think you have to also look at the geo mix. So I think this time around also continental and Europe seems to be pretty strong for them. So I think a reaction will probably be a function of what the management is talking about, more FY20 basis, which I think would still be early days because you're still getting into the budget season. So I think the outlook continues to be pretty strong for FY19. I think that's something that they've maintained. It's really commentary on FY20 or early signs of that. If we can pick up on the call is what we'll try to figure out. But purely looking at the numbers, I think it seems to be in line.
Cutting across to the press conference as well. In fact, Rajesh Gopinathan is saying that the strong client metrics, industry-leading growth in digital services, a very strong order book and deal pipeline are all validations that customers recognize our differentiated capabilities and are picking us for their growth and transformation programs. Also, NG Subramaniam, the Chief Operating Officer and Executive Director, is saying that this has been a very satisfactory quarter in terms of revenue growth as well as its operating metrics. The investments that we have been making in building newer capabilities and frameworks are starting to now bear fruit. He's saying our location-independent agile methodology, machine-first approach have been key in helping us advance EO-level enterprise transformation agendas as well. The CFO then, V. Ramakrishnan, a comment from him. He's saying despite headwinds from the rupee volatility against various currencies and the higher cost of doing business in some major markets, our operating margins have been resilient. He says we remain focused on driving rigor in our operations, generating strong cash flows and steering profitability back to our preferred range while continuing to invest strongly for future growth. And Harit, I want you to pick up on the point because, you know, my colleague who is currently at the TCS headquarters was earlier mentioning that perhaps TCS is likely, or rather this quarter is likely to be the best TCS has ever posted. But what is the feeler that you're getting from the prima facie management commentary? Do you think the best is now behind us? Or would you keenly look out for something in the management commentary that would give you that hint as to what they're likely to do in the year ahead?
Yeah, so I think I don't think there's any major issue as far as the revenue growth was concerned. That was more or less in line with the expectations. Obviously, some sort of clarity in terms of the reduction in margin. Possibly one is maybe cross currency. Secondly, last quarter he took the entire benefit of rupee depreciation to his EBIT margin. So that could be one reversal of the same happening here. So some clarity on that, and whether what steps he plans to take to maybe get margins back at a slightly higher level. I think these are some of couple of things I would look out for. Given the fact that the stock is trading in excess of 20 times FY20, one thing we should also note is that there's very little scope for disappointment. So from that perspective, that is one sort of, these are some of the issues we would like clarity on in the call.
Urmil Shah as well is with us. Urmil, what is it that you would make of the numbers? Seems like an inline set barring that odd management or other margin disappointment.
Yeah, I would agree. More important was that given the seasonal weakness, how the revenue growth comes in. So that has come in line with our expectations, and in fact a double-digit YOI growth at this size is commendable. As Harit said, we need to await what is the kind of clarification they provide on the margin front, and also their commentary on the early signs of the client budgets for next year. Given that we have been hearing mixed news on the economic growth, especially in the US. So I think this is what we would look for, more clarity.
Right. Apurva, I want you to come in over here, because 2018 has definitely turned out to be a great year for IT, and we've seen that reflective in the stock prices as well. The US tax cuts did spur higher spending by companies, leading to a broad-based demand situation. Also, the rupee depreciation only lifted IT companies further, and that was also reflected in the stock prices. But prima facie, what is your broad expectation on what we are likely to hear from TCS in terms of a commentary for 2019? Can that same kind of momentum continue going forward too?
I think, yeah, we want to understand if this double digit is sustainable. I think that if we get any sense from the management about this double digit revenue growth as being a sustainable number, I think that should be encouraging. A couple of other data points that I would look for, which I'm not seeing in the press release yet, is the TCV data, in fact, which they've started breaking out in the last couple of quarters. So whether there is an improvement, in the book to bill, I think that's another number to really look at. So I think broadly, the key drivers look to be pretty strong. So you're looking at core geographies which seem to be accelerating, whether it's BFSI or retail. Some of the core markets also seem to be doing pretty well. So I think that's all a positive right now.
Right. Urmil, the stock, given the fact that, from the Q2 results to now, it's largely been flat. The last 6 months' performance, actually, it's lower by about 4.25%. Would you say that there is scope that the stock could move higher, given the numbers as of now?
Yeah, I would say so, because we in fact are quite confident that double-digit growth would sustain in FY20, and we believe that in that kind of scenario, the differentiation amongst the large caps will only increase in FY20. While as a reference, Accenture has also seen a derating in its multiples. So like TCS has also seen that. But I believe as there is more clarity on how the spends would pan out next year, and there is more confidence on they delivering double-digit growth in FY20 as well. I think TCS can again go back to 22 times multiples.
Right. Apurva, I know we're all waiting for the management commentary and really want to hear out from them before taking any call, but I want you to stick your neck out. For a stock which is trading at 20.3 times FY20 PE on a forward basis, what is the scope for a re-rating further from what the stock has already achieved?
I think there is certainly scope for re-rating, so one is, like Urmil was saying, I think the possibility or better commentary on sustainability of this growth rate. I think that's one. And the second would be the possibility of earnings upgrades. So I think these two typically would be driving, re-rating. I think there is a decent chance of both of that happening. So I would not be surprised if I see a re-rating in the stock, because the basic metrics look to be pretty strong, as we're speaking right now. So yeah, we are looking at much higher levels. I think there is a decent upside, that we're looking at the stock from the current levels. But we would want to hear the management out certainly to get some more indicators around that.
All right, what's your view? Would you say that, given the feelers that you're getting from even the US Fed about the US growth per se, in all likelihood 2019 should be as strong?
Yeah, so I think it's at least, the acceleration in year-on-year revenue growth in CC terms to 12% is definitely a heartening sign. And on an overall basis, incrementally, it seems that the US may not necessarily be in for us as hard landing as what we were suggesting, in the recent past. So given these factors and TCS's leadership position, I think, from a growth perspective, there does not seem to be any major problem. So that is, I think, I won't say that there is any problem on growth. The only issue, of course, this quarter is some clarity on the margin and what is the sustainable, level that he is looking at going forward.
In terms of what you would like to hear with respect to outlook from, the UK and, the global markets essentially, is there something particularly on that front that you would be anticipating from the management commentary?
Yes, I think given, Brexit, that, we could have a potentially hard Brexit landing. So, if at all, any kind of color on that, so I'm not too sure that we have to provide that at the moment. Some clarity in terms of the, IT budgets for this year, if any, based on initial discussions with customers, that would be more important. So, macro will be what it is, but I think what is more important is the development at their client end. So that is what I want to hear, rather than, more a global macro kind of a, statement which may not necessarily, imply too much.
By UK for them at a good solid 25%. Europe has grown at 17.6% and the Asia Pacific geography at 12.6%. North America growth stands at 8.25%. India growth at 9.7%, and Latin America has grown as a geography at 7.6%. So all those concerns about what the commentary on Brexit is going to be, what's going to happen to the UK business. I guess, Apurva, that at least for the quarter gone by is laid to rest, considering UK has actually performed phenomenally well.
Correct. Yeah, that's correct. So I think I would also like to focus, just to add on to Harith, I would like to focus on some of the supply metrics. Because I think the subcontracting seems to have gone up, and that appears to be to have pulled down margins. So I think, as well as there has been a very slight uptick on the attrition side also. So I think that's probably something which has turned adverse as an industry if you see the last couple of quarters. So I think that commentary on the supply side of it would something that you want to understand, whether it is subcontracting, whether it is some of the hiring trends, laterals, on-site, how they the strategy is. So I think these are some of the data points that I would want to look at because I think that will show up in the margins immediately.
Thanks as always for standing by. In fact, we're going to just wind up this discussion. I can see the management already getting up. to address the media. It's been an inline quarter, but like our experts, Harit, Apurva, they were all mentioning what we'd like to understand from them is what really is the commentary on the kind of spends that we're likely to see going forward, and what is the commentary about what the 2019 outlook is. But I think I can cut across to Rajesh Gopi.